Good morning, hope you're doing okay. It was very crazy yesterday with the roller coaster that we saw. Nasdaq fell 5%, S&P was down 3%, and so what we're seeing a flush out attempt to the retail guys. Whether or not it's going to be successful, we don't know yet, but this remains to be seen. So we are currently fluctuating between risk on, risk off. Zero is like neutral. So we're at the precipice of a big move basically. VIX is above its yearly pivot, so that's quite a risk-off indication. And CAD's overtaking the dollar now strongest on the weekly and monthly. So there's a big battle with the dollar CAD, so be careful with that pair. See some strength on the Kiwi here and the Aussie, so that's that reversal and risk that we saw overnight. Whether or not that's going to be a legit bounce, we don't know. It could be, but I'll show you an S&P sentiment which might be indicating a buy. So there's the sell because they went long, and so hopefully that's clear. You know, look at the price. Now if they sell it against the 21 moving average, it would be a buy. So they need to sell this. They have to think, oh, we're going to fall now, and so they're going to continue to sell. If they buy, then we'll fall. So they need to sell, but the trouble is they might be looking at that support at 3,900 and think, well, maybe it will hold. I can probably afford a 30-point drop, and they might go long with that as your stop. If they do, we'll fall, and we'll come and take those guys' stops. Whether or not they're going to move their stops, we don't know. They might do. So we're at a important juncture with risk, so it all depends what the retail guys do, and it's just like not an understated statement. It all depends on what the dumb money are doing, because you can see how it's reflected in price, and this is the reason why this is falling. It's because of this, okay? And obviously we've got all those macro fundamental bearish narratives as well, which doesn't help. So that's the fundamental reasons for it to fall, but this is the sentimental reason. We need a flush. As soon as they get flushed out, we'll rally, and then it will defy fundamental logic. Okay, so there are things in play that are forcing price down, but this is a key component. Gold's just about to make a buy there. If you see, they're selling it against the 21 moving average, so that might be worth looking at potentially. It's a bit sideways. Not sure what to say about that. It's just like drifting, isn't it? We've got the 5 and the 10 inversion potential. If we do invert, we're going to be risk off again at a risk off. It will indicate a risk off scenario, and we don't want an inversion. We want a healthy curve and nothing like sticking down too much or sticking up too much. So that needs to come up a bit, that needs to come down a bit. Hopefully that's clear. So there's lots of mismatch, a lot of mismatch, ridiculous amounts. Dollar Swiss is a buy here, and unfortunately you can hear birds in the background, so I have to shoo them away. They're quite distracting. So yeah, there isn't really anything that stands out as a sell, but maybe Dollar Swiss is the greatest buy. Green. Cross yen, no, Swiss yen is out of bonk, but pound yen is the greatest correlation at 90% probability. If pound yen looks like it's going to puke, there's 90% chance the US 500 will follow. And what I'll do tomorrow for tomorrow's bulletin, I'm going to go and shoo those birds away, and then hopefully they'll leave me in peace. It's very distracting. So there's risk on, pretty much. Hong Kong and China are down, but we rallied off the lows. Looks like we recovered in Asia. So pound Swiss could be a sell based on extremes. So have a look at the pound Swiss. Remember to look at your technical analysis, don't just take it blindly. But there's the pound yen being weaker than the Swiss yen. Swiss is strong. CAD is weakest, so that is interesting. So that defies the technical, because we know the CAD is strong on the big time frames. Yeah. So sentimentally and technical, that could be a bit of a mismatch. So we have to wait and see what happens with the CAD. And there's the Dixie look. Using that lower support based on that angle, so it creates a shift channel. So that should be quite obvious why that was the support. And we've got the pitchfork support as well. I think this is indicating more bullishness for the dollar, so I'm going to be looking to sell GU and AU, and probably leave EU because of that ECB comment yesterday about the rate hike. So I'm looking to buy dollar today, and largest move was pound USD towards sell. So there's that red, 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 mismatch, 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 red, red, red for gold. So yeah, a bit tricky. Largest stop loss cluster is AU above. You can see it sticking out like a sore thumb. And location is at 7060. The size is 4.21. Dynamically, the Swiss is strongest and CAD is weakest. Be careful as CAD is mega strong and the high time frame. There's the calendar. Some stuff going on right now. Not that much data to be concerned with. We've got probably all that horrible data out of the way this week, which is good. And retail sales from UK on Friday. Got parliamentary elections in Australia, so that'll probably be a big mover for maybe don't hold Aussie over the weekend. And we did okay. It was 29 pips. So much volatility, it was ridiculous. So we were wise to close at 10 PM. Had we not have closed, we would have been a lot. Would be in negative quite drastically, because the pound yen and the euro yen, they rallied because the yen dumped because of, that we had a bit of a risk on mood over Asia, so the yen dumped. So we were wise to close at 10 PM, and because we did, we got 29 pips. Our best trade was euro yen. Our worst one was the dollar Swiss, and that's it. So basically, swing trading, I don't think it's possible right now, not until we flushed out those retail guys. Intraday scalps much better, and just trade safely, especially in this retail shakeout environment. So until we get rid of these guys, we're going to be volatile, and price action will just be pretty messy and choppy. So we have to wait and see what happens here. Hopefully they leave the casino. If they do, that'd be excellent, and then the volatility will calm down, and then we can resume to like normal trading. So have to see what happens here. So 69% long, so it's definitely skewed to downside. So just be careful, and just have a good day, and let me know if I can help as well, and I'll speak to you soon.